Hi all and welcome to TCM Education. This video, which is a recap of Friday's price action in 16 most important stocks, sorry, maybe not the most important stocks in the market, but most important stocks I believe to day traders. Okay, so Nike is not here, but plenty of amazing movers are here. We are subject to the list of only 16 stocks that made this list. Only 16 out of thousands. Okay, where we focus on this indicator, range percentage. This is our main goal here. Double underline. So the range percentage basically tells us or tells you that the stock is very volatile. It moves a lot between the highs and the lows. Okay, and this is that means that there is a lot of room for intraday traders to work up or down. And again, how do you make money as a day trader? If the stock is not moving intraday, how would you make money? I mean, the stock may be moving 100% in 100 days, but you as a day trader won't be able to do nothing because that's the fate of day traders. We need the intraday volatility. Okay, so now let's move to once you know these stocks, I think by now, and if not, it's here on the video. Let's move on and analyze each one. I will do it very fast. I already drew the entries on the chart because I want to be able to do this video in 14 minutes, which is very tough, so it's going to be fast. But again, you have the time to watch it in your free time, put your charts, analyze it, and see that if it fits your strategy and you can work with it. I hope you will. Okay, so let's first go with CRCL, the most volatile stock on Wall Street. There are thousands of stocks. This is the most volatile. Now we're looking for low risk patterns in CRCL, and the definition of a low risk pattern is that you risk no more than 1% on your position on the trade. So there are two options here. The one that works is short 190, stop loss above 191. You can see the pattern stretches between 1245 and it breaks down at when does it break down? Here at 120. So that's more than half an hour. More than half an hour of and again it fits the risk, because the most the stock moves higher is from 190 to 190.80, maybe a little bit more. Let's see, 190.71 actually, and the stop loss is $2 from 190 to 192. Fits 100%, actually half of the risk that we allow. So the risk here basically on paper is only 0.5%. And the full risk, when you analyze another pattern that looks pretty much the same, but it fails. So the stock breaks down, then moves up above, breaks 200, moves over the 202 by 20 or 30 cents. You stop out and you lose 1% of your position. If your position is 100 shares, you lose $200. If your position is 50 shares, $100. If your position is 1,000 shares, you lose, how much do you lose? $2,000. That's your, again, we're talking money, not shares, but just to make a point, because this is a round number. And again, take a look at the risk reward. You short at 190, the stock drops $15 on an initial risk of 2, but it was really 1. But let's say it was 2, so and you end up with a $10 winner at the close, which is another way to look at this strategy. Leave the trade until the close. So you have 5-1 on this pattern. Okay, so here you made $10 on the move. Okay, and here you lost 2. So you're up $8 times the number of shares that you bought in CRCL, the most volatile stock on Wall Street. I hope it was clear. Number 2, stock number 2, Palantir. No low risk patterns, although there are low risk patterns, but we want to trade with the trend of the stock. I don't want to trade against the trend. And, we want to be very, very simple and straightforward. Pony. Trend is lower. You can see this 10-cent risk on the trade. So on an entry under the pattern is more than half an hour, so it's easy to observe. Again, if you're looking for it. So it drops from 14 to 13.66 at the close. Is it good enough a trade? Yes, it is, because it's not your only trade. It's one out of many trades. 4, 5, 6, whatever. And the idea is to take low risk trades. And you can take 10 low risk trades, lose all of them, which is insane. You're not going to lose all of them because you're trading the right stocks. This is why it is I think one of the best power lists to trade off. Okay, and I've been watching charts for 20 years. I think it's one of the best. Obviously, there are better. I wish I could find those better setups. So OUST, we can use try to use these VWAP reversals, but that's not good enough. Definitely not clear enough. Moving on. HSAI, the trend is higher. We use the VWAP for a first trade of 20 cents of risk. And we use this narrow range, let's see, for 242 until 1506. So that's more than 20 minutes to observe. And the risk here is 10 cents. And it yields 60 cents. Okay, so again, you see the power of this strategy. Okay, and here you have 2 entries using the VWAP, using a 20-cent risk, which is less than 1%. Okay, I have plenty of time. Okay, so let's not rush. Okay, no, I'm just making a point that this stock can be shorted under this triangle breakdown, but it's I have to agree that anybody that will point, it's a very tough trade. The risk is not really clear. The stock is up and down. Let's move on from this one. New scale, same pattern, we'll ignore it. Quantum. Straight down, straight up, straight down. Nothing, no pattern that shows low risk. You have to guess here when the reversal happens. We're not in the business of guessing. Take a look on the other hand on this entry. The stock trades under the VWAP with obviously less than 1% of risk for almost from 11:30 to 12. So half an hour you have time to decide. Do you want to enter this trade or not? How you want to manage it? You want to wait until the close? In this case, you end up with nothing. But is it the right trade to do? So it comes back to the entry, and you stop out. Or if you trade with the US broker, you don't have to pay even commissions. Nothing. 0. So you have an attempt that can make you on paper on $20,000. A position of $20,000, which is 400 shares, it can make you $2. That's $800, and the risk is I would say $150 here, maybe a little bit less, on average. Okay, there may be some slippage because I don't know how Exas is trading with spreads, without spreads, but just making a point. So can it close at the highs of the day? Of course. That's why it is on the list. But it doesn't. So this is a no, it's not losing money, obviously, because you move the stop loss to the entry. Hims and hers, wow, this stock is wild. No trade. EVA Technology. There is a trade, but it's not perfect enough. Okay, late in the day, let's ignore it. PGY, a clear uptrend, a clear consolidation that takes between 12:30 and almost an hour. So you can observe this 10-cent consolidation or bull flag, whatever you want to call it. Now, does it make money? No, because it comes back almost to, yeah, it comes back to the entry, and your target is to close it at 4 p.m. So again, no money, but no risk. So what are the chances that a trade like this will work? Sometimes a trade like this that starts with a 10-cent risk can end up being 60, maybe $1 winner. So it's really, really worth trading. And again, maybe there are better entries along the way, but all of them carry more risk. This one does not carry a lot of risk. This is a 10-cent risk on a $20 stock that's less than 1%. That's 0.5% of risk. How little you want your risk to be when you take a trade? KATO. Here we use a smart move. Okay, we use the 45 as 10 as supported at the VWAP, because you can see that the stock is coming down to the VWAP and never breaches, and then you enter. I posted the entry at 45.30, but it can be also 45.20. And again, it's not a big mover, but again, the target, it's a low risk, very low risk trade that doesn't make a profit. Okay, but the target is nice. It's 47. So you enter at 45. Can it make it to the highs of the day of 47? Yes. It just doesn't. It didn't do it. That's a different story. But again, you can clearly see here the very low risk trade, and the importance of taking these trades is that, first of all, nothing happens if you lose money. If you don't lose money, even better. And some of them will turn into big winners because, again, we're trading the right stocks. EchoStar. Hold on a second, guys. We have enough time, I think. Here, two potential low-risk trades. A breakout over the highs of the day on a beautiful bull flag. The risk is less than 1%, 20-something cents. And then another bull flag where the risk is 15 cents. Still, on the first entry, you make more than $1 on the 20 cents of risk because it closes at the 28.80. On the second entry, you don't make money because it's coming back to your entry, erases it by a couple of cents, and then moves higher. Okay, so that's trading. Sometimes you lose a huge winner because of 2-cent slippage. It can happen, even 1 cent slippage. And it can be avoidable because wherever you're going to put your stop loss, there you can stop out. There are no guarantees. And take a look, guys, at the last example, which is maybe the best one. There isn't a stock over the last 2 days that's more volatile than this CYN. Okay, the volatility is the spreads. It trades like crazy. So when I said CRCL is a real stock. CYN is something that will probably disappear in days. We won't see this stock again. Most likely, I don't know. But take a look at this 15 round number support level. And this support level stretches between 12:30 to almost 4 p.m. So there are hours where you can observe this pattern and decide if you want to buy it close to 15, which is 15.10, 15.20, 15.30, wherever, and have your stop loss under 15. And that is a low risk trade because I dare anybody to show me a trade on this stock where the stop loss is not less than $2. You won't be able to figure this one out. Okay, guys, 14 minutes and a half. Thanks for being here with us. Please like and share this video with your friends, and we'll see you in our next video.